You have more health insurance options than you realize. It used to just be fully insured options versus self-funded options. But today, there's a whole spectrum of finance options in between fully insured and self-funded that you should be aware of. To figure out what financing vehicle might be the best fit for you, ask yourself these three questions. How do you finance your plan? The right financing vehicle will give you access to your health plan data, which is the biggest trend right now employers are looking for is, hey, how do I get my health plan data? Well, if you do the finance part of this equation right, you're going to automatically get your data. And that's huge because employers are really tired of being given health insurance renewal increases with little to no data to back up that increase. The next question is, how much ownership do you want? There's a difference between renting and owning a home, and there's a difference between renting your insurance and owning your insurance. And there's different options for both out there. And how much control do you want? Employers want to control their health insurance costs. Healthcare in this country has basically been like a runaway train for the last 10 to 20 years. And employers want and need control. They want to control the cost of their claims. They want to control the quality of the care. They want the best care at the best price for their employees. Some programs give you that flexibility and some don't. So let's jump into the full spectrum of ownership versus control. At the bottom left-hand corner, we have fully insured programs. These programs give you the least amount of ownership and the least amount of control. You're basically renting your insurance. You pay a fixed premium every month, and at the end of the year, it typically goes up, and you have very little say over what plan you offer, who's in the network, and what your money is being spent on. Then if you move up the spectrum a little bit, the next best option is an HRA. You're still fully insured, which is great, but you're going to self-insure underneath those deductibles. So you're going to probably save some premium, be able to offer your employees a better benefit, and you're going to get a little bit of claims data. The next option along here is level funding. This is a nice hybrid option. It's truly self-insured, but it looks and feels like a fully insured program where you're going to pay a fixed amount based on your enrollment count every month, just like you would fully insured. The biggest difference is you're going to get full transparency on your claims data, so you'll know where your employees are accessing care, how much it costs, and what is really driving healthcare costs inside your health plan. Next is partial self-funding. This is where you go out, we help you secure stop loss, we help you find a third-party administrator, you get a network from one of the big carriers like Anthem Blue Cross or from Blue Shield or Cigna, and the third-party administrator helps you pay claims as you go. And last but not least is captives. This is where you actually become an owner of the insurance company and you self-fund your health plan within, but there's a lot of ownership and control you have, and the most advanced cost containment programs are available through these captives at the most affordable pricing. But if you're not looking at these options and you'd like to learn more, I'm happy to help. Please reach out. I'd love to discuss these options with you and see if you might be a good fit.